Yo, what's going on my people? Humidity Liquidity here. Welcome back to a brand new video. So in today's video, we're going to be going over the ICT silver bullet and how to trade it. So over here we have the silver bullet times. So this is EST 3 o'clock to 4 o'clock EST, 7 o'clock to 8:30 EST, 10 o'clock to 11 o'clock, and 2 p.m. to 3 p.m. EST. Now the things you're going to be looking at within these time windows is you're going to be having a drawn liquidity to be aiming for. So that'll be previous day's high, previous day's low, previous session's high. So that could be London session, Asian session, previous AM session, previous PM session, that type of thing, the previous lunch high or low. So you could be looking at previous sessions high and low and previous week high and low. So these are your draws on liquidity where you're targeting, and these could also be potentially where you're looking for liquidity to be taken, just depending on whether it is a continuation or a reversal type of day. For your silver bullets, you have two scenarios. You either have a continuation or reversal. Okay, so for your reversal scenario, price should be building up liquidity prior to the silver bullet time window, and then you'll see price start moving to a drawn liquidity over here on the left side. And then once price comes to this draw, you want to see price break and shift in market structure over here, and then price will give you that fair value gap entry or whatever, and then here it will go to the draws on liquidity. So it'll come for this market maker sell model original consolidation over here, and then come down for another drawn liquidity over here. So this is the reversal scenario. The reversal will happen within the time window over here. Okay, now if we're looking at a continuation, we're looking at price over here, let's say a bullish continuation. We're looking at price to come down, already take liquidity, break up, give us that structure shift, come down, respect these fair value gaps, and then price can come over here and then continue up within here. So it does not seek the sell side area, it seeks a buy side area over there, buy side drawn liquidity. So that's it. Price may come into a discount of this area, so potentially even down there in some scenarios, or just a 15-minute fair value gap. So yeah, those are the two scenarios. Just flip it and it would be for bullish and bearish. Just think of it vice versa, and yeah, just simple as that. Okay, so you're either looking for a continuation or looking for a reversal within your silver bullet time window. So right now I'm gonna show a couple examples. Over here we are looking at the London session silver bullet. So over here we see sell side liquidity has been taken, and we're aiming for the previous PM session high. So let's look at this on a 1 minute. Okay, so on the 1 minute time frame, we see that there has been a reversal prior to the 3 o'clock to 4 o'clock time. Okay, so before that window, we got a reversal. So what we're looking at, a continuation within 3 to 4 o'clock. So here, 3 o'clock starts, price tries to break up, and then what do we see? Price comes for this low over here, this area of sell side, and then what do we see? Price comes up to break structure. What else do we see? We see this fair value gap right here. So here's our fair value gap, and then from there you could take your entry when price taps into that, and then you would be aiming for the previous PM session high over here, which the draw would have been met within that time window. Alright, so over here we are looking at a continuation type of example. So over here what's happened? Price has taken this area of sell side liquidity over here, prior to the 10 o'clock silver bullet window. We also see this area of sell side taken on the left over here, which is the previous lunch hour low right here. Okay, so price has taken these two areas up. Okay, so now we're going to move into the 1 minute and we're going to have a look at what's happened within this price window. We see that sell side liquidity draw being taken, and what happens prior? Price starts breaking up. Okay, now once we see price start breaking up, then we're anticipating 10 o'clock to start giving us that continuation. We're not looking for a reversal within this time window. So here, what do we see? Now I'll zoom in. So 10 o'clock, what do we see? 10 o'clock is hit. Boom. We see a fair value gap over here. We see this inverted fair value gap over here as well. We also see this order block. Now you have these three PD arrays. You could use any of them. But over here, we're using the fair value gap. Price break structure over here prior to that 10 o'clock, 10 to 11 silver bullet hour. We form this fair value gap. Price at 10 o'clock starts drawing into this fair value gap over here. From that fair value gap, price starts breaking higher. And then we have these fair value gaps within this area. You could look at it from a premium discount perspective as well, depending on how you want to look at it. Now, our overall drawn liquidity was the previous day's high. You could have used the London session high as well. So here we see previous day's high, which is this red line over here. And let's look at what happened. We see that price has taken this area of liquidity. So yeah, as simple as that. We are just looking for either a continuation or a reversal type of scenario. So yeah, let's look at another example. Okay, so now we're looking at a reversal scenario within the silver bullet time window. So over here, what do we see? We see this area of sell side liquidity being taken. We also have this 9 o'clock hour low that's also been taken. Over here, we're looking at this low. So here, external range liquidity has been taken. Okay, and the drawn liquidity is the London sessions high. Okay, so let's drop down to the 1 minute and see how price played out within this time window. So here, what do we see? We see this area of sell side being taken. Right here, price drops down one more time, breaks up. What do we see? A break in market structure over here. We also have this fair value gap, and from that fair value gap, price starts to move up. Your first drawn liquidity, these interest session highs over here within the same session, the AM session highs, that could be your first drawn liquidity. And then the ultimate drawn liquidity is these London highs. And you see that you're just looking for a continuation after you see this reversal. So this is a reversal scenario, and over here you're able to capitalize on some more buys. Now if we actually look on this same day, I did actually take some executions. So I'm not just waffling over here. I do actually trade the silver bullet when it's worth trading. So yeah, over here I took a buy knowing that this is going to be the reversal, and then I took another buy once we closed above this high over here, that market structure shift, a break of structure. And then I took another buy once we came into this fair value gap over here, and then price went up and then gave a little retracement for this fair value gap over here, which I bought. Now, why did I buy specifically over here? Because there was this breaker over here, just reading order flow. And yeah, so there was that breaker. That's what I was looking at. Price came over here. I saw price tap it, and then it was an up close. And then it closed above this 1023 candle. So over here, it was indeed an order block. I started changing the state of delivery, and then we kept closing above and above. And then I took another entry over here in this fair value gap. So yeah, on the left over here was a mitigation block, but we don't need to get too into detail of that. But yeah, over here these are my executions, and my primary target was indeed these relatively equal highs, which I took partials from. And then once we took these highs over here, I didn't really want to wait too much, so I did take majority partials around 10 minutes after the silver bullet was done for the day. All I wanted was this low hanging fruit. I could have held, of course, but I wasn't going to stay on the charts for too long, so yeah, I left it like this. And yeah, simple as that. Over here you see a proper live example, real executions. Let's just show that right there. So yeah, on the previous day, on Tuesday, I also did take executions as well, right over here. So yeah, see, I did actually take everything I showed basically, apart from the London session ones, because I don't really trade the London session. But yeah, over here we see my executions. So yeah, simple as that. Everything in this video was taken, and yeah, that fair value gap, I did not take a re-entry, didn't really stay on the chart on this day for too long, just let it play out. And yeah, partials taken at around the London high. So over here we see the 2 o'clock hour high. This was my area to partial from, I think, something like that. Yeah, so that was the partial area. Price tapped it, and then I decided to take a small partial and then let it run, because I was at break even anyway. So yeah, simple silver bullet hour trading. As you can see, executions have been taken. Over here was a bit early, but all in all, everything played out like I did demonstrate over here. I hope this video was insightful, and I'll see you guys in the next one. Peace.